welcome back to the channel. In this video, what I want to do is I want to review this trading strategy that you see right here. Now, this is another educator who has done a great job. Okay, you can see that his video has gotten a lot of views. So one of you have actually asked us whether this is actually a workable strategy. Okay, so what I want to do in this video is I want to run through the strategy and share with you my thoughts on whether I think this strategy is actually workable and whether you can actually make money from it. Now, as a disclaimer, I have not done the full research. Okay, I haven't done a back test for 6 months, 1 year, 3 years of data, but what I'll be sharing with you is based on my experience of trading the markets for the past 18 years. Okay, so I've done many tests on other strategies like this. Okay, when I first started, I tried other things like MACD crossovers, divergence. So I pretty much tried a lot of systems just like this. So that's what I hope to achieve in this video, to give you an insight about whether this is workable. Now, I'm going to assume that you have not watched that video, so I would like to start off this video by first talking about what the strategy is first. I want to do a quick summary, okay? So right here, I have the steps involved in that trading strategy that you just saw. Okay, now step number 1 that he teaches is to determine the long-term trend using a moving average. Okay, this is pretty sound. Okay, it's something that we ourselves do in our 3-day trading guide, which is the MPE trading strategy. M for market condition. Okay, right here it's also about the same, because trend is always the first thing that you want to focus on. So he actually defines the trend as using a moving average. So of course, if price is below the moving average, then he calls that as bearish. And if price is above, like over here, then it's bullish. Okay, so that's very simple. So he starts by defining the trend. That's pretty basic. Now, step number 2, he looks to use the MACD. So right over here, you can see that I have the MACD with the default settings. Okay, what he teaches is to look for an entry. So what do I mean by entry is that once you see a crossover, something like this over here, you can see that there's a crossover. The blue line crosses over the orange line. So when you see that, that is a MACD crossover. Okay, so this is what he's looking for. And when he sees that, he goes ahead and take the trade. So of course, in this case, the trend is bearish because the price is below the moving average, and then we have a bearish crossover. So how he places the stop loss is he places his stop loss above the swing high, and his reward or take profit is just 1.5 times the risk. So in this case, let's say if his risk is about 49 pips, then his profit will be about 73 or 74 pips as take profit. Okay, pretty elementary stuff. Now let me just show you a couple examples of this strategy first, or rather a couple of setups, before I talk about the issues that I think you'll probably face if you trade like this. Okay, that's going to be very important. It's going to save you a lot of money, especially if you watch that video and you're very excited to try that. So I hope this is a good warning, or rather I want to help you to save money and not go through the painful lessons that I suffered in my earlier days of trading. So let's look at some examples first. So for example, right here, we have another one. Okay, price is below the moving average, and of course, we have a crossover right here. Okay, so in this case, the entry will be something like this. Okay, something like this right here. Okay, stop loss goes above the recent high, and of course the take profit is about 1:1.5, so something like that. Okay, now one more bullish example and I'll go on into the issues with this. Now right here you can see that price is above the moving average, and right here we got a crossover. So somewhere around here, let me just draw it, somewhere around here we can go ahead and take the entry and stop loss below the recent low and take profit 1.5, something like this. Okay, in this case you can see that price didn't actually hit it, or probably hit it. Okay, it's quite close, depends on the spread. So this is the setup. Okay, this is pretty simple. Now let's talk about the issues with this. Okay, a lot of you watch trading strategy videos like this and you get all excited, and what happens is that you start applying this on every single price chart that you see. Okay, you do not understand that this strategy only works in a trending market. Now you can see that this example is pretty clear that it's a downtrend. But let's talk about examples like, for example, right here. Okay, right here. You can see that price is rather choppy over here. Okay, so if you took the long somewhere here, you took the long somewhere here just above the moving average, chances are you probably get stopped out because you put your stop loss below. Okay, and here's the thing, the market ranges most of the time, and this is the critical portion that you need to bear in mind. The market ranges most of the time. That means that you're going to get whipsawed most of the time. Okay, and if you are trading a risk to reward of 1:1.5, chances are your take profit isn't big enough to cover your losses. Okay, so this is the main issue with this strategy. Not that it doesn't work, but you need to have the skill to read the price action. You need to understand that this kind of strategy only works in a trending market, in a very clear, nice movement like this. Okay, this is something that a lot of beginners don't know. Okay, they just start opening a chart, and then the moment they see the crossover, they happily sell, or they see the crossover here, they happily buy, and end up in the long run they actually lose money. And that is why actually in our day trading guide we talk a lot about the market stages as well as identifying the market condition. Okay, by the way, this day trading guide, you can find a link in the description down below. It's totally free. Okay, it's pretty comprehensive. We teach you the basics. Now, regardless of whether you want to use our strategy or this strategy that I'm talking about, you want to test it, it is mandatory that you understand how to read market conditions. Okay, is this a trending market? Is this a range bound market? Is this consolidation? This is key. If you do not get this part right, then this strategy is not going to work for you, because you're going to apply this during a consolidation market, or rather when the market is consolidating, and you're going to get whipped out. Okay, so let's end off with how do you tweak and improve this strategy. Let's say you really like this strategy because you are convinced that it works, or it just suits your personality. Okay, how do you actually improve and tweak the strategy? Now, I would say that you need to still start with identifying the market condition. Okay, a moving average in most cases is not a very good, or it's not a foolproof way of identifying the trend, because sometimes you can have movements like this. Okay, and this kind of movements right here as well, it's rather choppy. Okay, a moving average is going to be flat and you can't really tell the trend. Okay, so you need to have a better plan, or you need to be able to identify when is the market trending. Okay, again, on this channel we have many videos to teach you how to identify trend. This is also taught in our free day trading guide, so if you have not yet downloaded, please go grab it. Okay, so that's all I have for you in this video. I hope you got a ton of value. If there's any other trading videos that you'd like me to test, or you'd like me to have a look, right, please leave a comment down below. Okay, if you are new, right, do hit the subscribe button as well. Please support the channel by hitting the like button, right, really appreciate it a lot. If not, thanks for watching. I'll catch you in the next video.